Hi there. Welcome back to the O.B.S. Financial Educational Series, Learn from the Tax Masters. My name is Stacey Bartel. I'm president of O.B.S. Financial, located in Oakbank, Manitoba. Today's Thursday, February 21st, and I would like to start talking to you today about going over our pay stubs and making sure that everything on there that is deductible is caught for your tax season. Before we begin, I just want to invite you to watch to the end as we're going to be doing another draw for tickets to Friday night's Springfield Theatre Company's performance of The Addams Family at the Oakbank United Church. So stick around to find out how to enter for that draw. Being Thursday, about 40% of you are either getting paid today or planning on having your pay deposited into your account overnight through direct deposit. But either way, you should have received your paycheck or your pay stub already. I want to apologize to the 60% of you that aren't getting paid this week. That's going to come next week when it's either Friday or the end of the month. So you can pay attention for next week or stay tuned and retune into this video next week. Back to the pay stub. When was the last time you looked at your pay stub? And if you did look at it recently, did you look past the amount that you're actually getting paid? For most of us, we look at how much money is going into our bank account, determine how much money we have to pay out for our mortgage, payments, kids' sports, do everything else, and find out what we have left. One of the things that's always missed is what takes up the amount of deductions that we have on our pay stub, right? When we get paid, everybody seems to have their hand out. The federal government's taking federal taxes, the provincial government's taking provincial taxes, the feds are also taking their share of CPP and EI. But then there's always other companies or other people that have their hands out in their pay stubs, and we need to make a conscious effort to take a look at that. Some of the deductions that most of us are going to see is, number one, union dues. If you're unionized, the union's going to take their share off in order to help fight for your rights. You may also be having deductions for charitable donations, pensions, group RSPs, and maybe even assisted childcare deductions. If you've got group benefits, you're going to be looking at deductions for your disability, life insurance, critical illness, other living benefits that you may have, as well as your extended health care and your dental coverage. You may also have other deductions such as parking, bus passes, canteen or food items, employer loans, or a multitude of other deductions that may or may not have an effect on your tax return. Well, every person's situation is different. Your final pay stub of the year is just as important to us as your tax advisor as your T4, as it may have deductions built into it that are not reported on your T4 and may go unnoticed to the untrained eye. Over the next couple of days, leading up to February 28th T4 deadline, we're going to discuss some of these items with you in order to make sure that you've got your tax deductions in line and save you that almighty dollar at the end of the year. For today, let's talk about the most missed tax deductions in Canada. Premiums paid for your group benefits. For those of us that have group benefit plans, there's a multitude of things that are covered. We're covered for life insurance, accidental death and dismemberment, spousal life insurance, critical illness, maybe life insurance on our kids. On top of that, there's going to be disability, short-term and or long-term disability, extended health care payments, dental payments, and a bunch of other items that go as far as our group benefits. When we're looking at that, some of these are deductible and some of them are not. So first off, let's talk about some of the top ones. Life insurance, accidental death and dismemberment, critical illness, and other living benefits. Unfortunately, these are not deductible. The reason for that is that if you had to pay for these benefits, then the amounts would be taxable when you receive them. So because you're paying for the benefits, you will not be taxed on the money that you receive should something happen that you have to put in a claim for those. Same thing kind of goes with your short and long-term disability. These items may or may not be tax-free depending on your conditions. Number one, if you pay 100% for your disability premiums, and you do go on disability, your disability will be tax-free. However, if your employer and or your union in some cases pay all or even a portion of those premiums on your behalf, that amount is fully taxable to you when you receive it. Right? One of the things I always suggest is check with your HR department in advance and find out if your disability is tax-free or taxable. Right? That would determine what happens when and if you have to put in a claim. The other part of your extended health care benefits are your extended health and dental benefits. These are the ones that we use the most. These are the ones that are the most costly on your benefit plan. And these are the ones that, believe it or not, are deductible. Most people don't know that whatever you have deducted off your paycheck for your extended health and your dental plans are deductible on your income tax return as medical expenses. These plans are going up and up in value. They're very costly. They can cost you $1,800, $2,000, $2,400. In some cases, some plans run over $3,000 a year that the employees are paying into their plan. That is a deduction, and that is missed. Now, employers do have the option to put it in box 85 of your T4. However, most employers, especially the smaller ones, they're not having their stuff done by tax experts, or even if they are, they may not be paying to have those amounts being taken out. The payroll companies that they're dealing with are only focused on the payroll and the deductions, not necessarily your tax situation. So if these amounts are not on box 85 of your T4, make sure you bring your pay stub into your tax advisor when you get it done, as those amounts will be deductible. Now, what is important to understand is that some paychecks don't break down what you're paying for extended health care, for your dental, for your life, for your disability, and whatever else. A lot of employers will just group it as group benefits. So take a look at your pay stub now. If you see that you have deductions for extended health care and dental identified on those, then your pay stub, the way it is right now, will be perfectly fine at tax time. If it's not, then what I would advise you to do is write a letter or send an email to your HR department, ask them for a breakdown. They all receive a monthly or an annual bill telling them how much each employee has to pay for their benefit plan. It's all broken down by item type. So they should be able to go and get you that information in advance, so when it comes time for tax season, you're able to get it back as medical expenses. You can recover about 25% of it once you hit your deductible. Anyways, I want to thank you for listening today. Stay tuned for tomorrow's sessions. Tomorrow we're going to be talking about pensions and group RSP deductions off your pay stubs, what the difference is and how they're reported. Also, as I promised, if you want to see Friday's performance of The Addams Family, presented by The Space and the Springfield Theatre Company, just follow us on Facebook, follow us on our YouTube channel, or follow us on both. For every follow that you do today before midnight, you'll be entered in for a random draw. The winner will be drawn tomorrow morning, and you'll be sent a private message through Facebook notifying you of the winner. Anyways, thanks again, and we'll see you tomorrow.